It's newspaper time, and home loans are entering an uncertain era. That's today's story. Let's dive into it. Hey there, I'm Clayton Morris. I'm the founder of Morris Invest. I'm a longtime real estate investor, and today we're going to talk about some news of the week. And of course, the presidency in the United States has shaken up a lot of things. But one area that I'm really focused on, of course, is the home sector and home loans and our ability to get loans and mortgage rates and what this is all going to mean for us going forward. Well, the front page of the Wall Street Journal this week with this story, home loans enter uncertain era, and really talking about the remaking of U.S. politics likely to upend the nation's mortgage market. And they say there are two key reasons why: rates and regulation. So one of the things that we know from a Donald Trump presidency is that he would like to roll back portions of the Dodd-Frank law. The Dodd-Frank law, many lending institutions believe, and many investors believe, that it's inhibiting to us, that we can only get a certain number of, like if we wanted to buy a number of rental properties, we can only get a certain number of them with using a conventional loan. We're only allowed in certain areas, I think up to 10, under our own name with like a local bank down the street. Really? So that means I have the ability to find great rental properties and you're only going to let me buy 10 of them under my own name? That makes no sense. So that's part of the Dodd-Frank regulation. There are many, many other layers to Dodd-Frank, of course. It's incredibly onerous, and it was obviously put in place after everything that happened during the 2008-2009 crash in order to keep us more stable. But in the end, it's really inhibited, I think, a lot of growth for investors. Our ability to lend money, our ability to borrow money, and our ability to expand our portfolios of rental properties. It's been difficult for people. Really had to find creative ways around it. So obviously this piece talking about how much of the Dodd-Frank law would Donald Trump and his administration attempt to repeal or roll back. So that's why these mortgage numbers right now are entering this uncertain era. One of the other key areas, so that's the regulation piece, is the rates, mortgage rates. Right after he became president-elect, we saw this big surge in the bond market, which had been flagging for a while. But we also saw a surge in mortgage rates. Now, we're still really historically low for mortgage rates, but we did see a spike, and it jumped up like a percentage, like 1 point. So already we're seeing some shifts in rates and ability for people to actually get home loans. So this all is tied to the recovery of the housing market right now. And the housing market is troubled. A lot of people think that in some of those areas of California, New York, Miami, Chicago, we're sitting in a bit of a bubble, that home values have skyrocketed and mortgage rates are so low, and people are able to get loans on million-dollar homes that they technically probably couldn't afford if it was even 1 point higher. Think about that, right? If their mortgage rate with interest was like 1 or even 2 points higher instead of 3% interest, maybe 5% interest, they might not even be able to borrow that money on that house. That's how close they are to being able to afford that larger valued property. And so this article pointing out that we're seeing perhaps a shift now, and if those mortgage rates go up, what does that mean to the value of those ridiculously overpriced homes right now? Are we going to see some moderation here? And could we see a bit of a correction and therefore some bubble problems in areas like the on the East Coast and on the West Coast? Could we be headed for some problems? People being priced out of their homes, not being able to afford the place they live in. So that's why we're entering this uncertain era right now, and I thought that this piece was particularly interesting. So the bottom line, the moral of this story is that before the end of 2016 or early 2017, if we're going to be seeing rates heading higher, and you're thinking about buying that home or buying that rental property, get those mortgages now before rates start to go up a little bit higher, and before we even know what's going to happen with Dodd-Frank in the next few years. So that's my advice. Take it with a grain of salt. But one good thing could come of this is a rollback of Dodd-Frank and our ability perhaps to get more access to more money in order to fuel our economy and to buy more rental properties. Because after all, that's what we're all about here. We've got a lot of great playlists here on the channel. Go over and check out our other videos. We talk about buy and hold real estate, DIY, if you're one of those people that likes to get your hands dirty and get out there and hang drywall and buy rental properties yourself and do all the work yourself. We have some great playlists and videos on that as well. And please don't forget to subscribe. See the little icon right here? Just go ahead and tap on a little bubble and subscribe to our channel. We publish videos multiple times a week, all focused around buy and hold real estate. My name is Clayton Morris. Go out there, take action, and become a real estate investor. We'll see you next time.